The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Good morning, everybody. How are you? Yes, welcome again to the new year, 2025 as well. I know some of you only just joined us for the first time. Where were you yesterday? Anyway, you're watching Squawk Box. I am Steve Sedgwick, and these are your headlines. The S&P 500 and Nasdaq kicking off 2025 in the red. Their fifth straight negative session and the longest losing streak since April. But the greenback extends its rally into the new year with the dollar index hitting a two-year high. We'll discuss why in a few moments. President Biden reportedly deciding to block Nippon Steel's proposed $15 billion takeover of U.S. Steel, with an official announcement possible as soon as today. A standoff in Seoul as South Korean authorities fail to execute a warrant to arrest impeached President Yoon Suk Yeol, outnumbered by presidential security forces. And how do you justify 100 times forward PE? Well, not like this, really. Tesla shares hit reverse after the EV maker reports its first decline in annual deliveries for many, many years, down more than 1% on the year. A very good morning to you. You're all okay? Good. Bit late for you in stateside, but I'm glad you've joined us, and welcome to everybody from around the world. So should we have a look at the US markets and what they did yesterday? I mean, these were fairly moderate moves, isn't it? I mean, I don't miss a takeaway from my stunningly dramatic headlines about 5 days of negative declines here, a couple of days here as well. But I mean, let's be brutally honest about it. These are not dramatic moves. We were down 0.16% on the Nasdaq, down 0.2 on the S&P 500, and as you can see, the Dow led us lower, down 0.36. Now, the Treasuries, how firm is that 4.5% yield? Very apparently at the moment. But my next guest is just sitting down next to me, so I'll ask him in a few moments' time as well. Because the fact of the matter is, we had good data again, and I'll come to that in a few moments' time. But the firming of the dollar index continues. I wouldn't say we've got free fall in other currencies, but we do have. We're on dollar crosses, by the way. But we do. That's right. You stick with us, Roger. That's right. It's 2025, Roger. We've stopped having the holiday. We've moved on to dollar. I said dollar. Okay, right. Okay. Dollar crosses. Not in free fall, but we do have the euro dollar on 102.72. So it's the first time I've seen in a long time a 102 handle on the dollar, just so he still stays there. The pound, he's still there. 123.93, the pound versus the greenback. Dollar yen 157. So look, across the board, there is ascendancy for the greenback. Commodities, just trying to flag it for him. There we go. 73.22. So we're seeing commodities rally actually at the same time as the dollar. Oh, that's interesting, isn't it? Because the inverse relationship not in place, certainly for the last session. But we've seen WTI having a pretty strong vein of form as of late. It had a 69 handle not too long ago. And WTI with 73, but Brent up to 76. And a quick honourable mention for spot gold, trading fairly flat at 26.58. Right, let's move on to the data, which I thought was spiffingly good. And that's what you want to see, isn't it, at the moment, I think? Yeah, I can't work out what you lot want. I think you might want it to be slightly weaker than this. But again, I'll come to that in a few minutes' time. Weekly jobless claims out of the US hit an 8-month low. How many times have I had guests on this show telling me, telling us, telling Karen, telling us that actually the jobs market is weakening? And it may well be, but it ain't in this data. 8-month low in the weekly jobless claims last week, coming in at 211,000 for the week ending December 24th. That's 9,000 down on the previous week and below forecast. I'll tell you what I will do, though, because I'm going to give you a bit more depth. The 4-week rolling average on this decreased, which I think is more useful, decreased 4,000 to 223, so it's still declining. Now, the figure's adding to a flurry of data points indicating consistent, it says here in my read strength. I would say consistency in the US economy. I don't think we're boiling over, but we are certainly solid, bolstering market narratives that the Fed could cut rates less than previously been expected this year. Are they going to cut rates? They might not have to. The dollar hit a 2-year high on the back of the news. And I'll give you one more piece of data. Manufacturing PMI has been revised higher. Higher than expected again. Anyway, we've got a lot of political news as well, including investor attention turning to Congress, where both institutions will convene for the first time this year. The House of Representatives will vote on the speakership. Republican Representative Mike Johnson, well, he's been fighting to keep the speaker's gavel, but he's got the backing now of the president-elect Donald Trump. That kind of means he'll keep it, doesn't it? I think. Anyway, but defections from just 2 Republicans in the House could block him. And of course, some Republicans are very annoyed with him about how he worked with the Democrats on trying to avoid a prolonged shutdown. How long do we have a shutdown for? I think it was 30 odd minutes, wasn't it? Anyway, they could block him from holding on to the top job. The vote is coming up at 5 p.m. GMT. If the Trump presidency has said he should keep the gavel, does that mean that those who are annoyed with Mr. Trump for, accessing, allowing some form of deal to be done to avoid the shutdown, does that mean there's going to be a bit of dissent? How strong is the Trump mandate in Congress? It's all to play for. Anyway, that vote is coming up at 5 p.m. GMT. Anyway, Manish Singh has joined me, Chief Investment Officer at Crossbridge Capital Group. Good morning, Manish. How are you?
Steve, Happy New Year.
Yeah, Happy New Year to you, my friend. Look, there is so much to discuss. Why don't I start off with that US data, which I was banging on about there as well. The US data is way better than many of the doomsters, the Cassandras out there thought it would be as well. How are you interpreting it?
So let's look back to what Chairman Powell said in his December when he did the press conference. He used the phrase, US economy is performing very, very well.
Yes, he did, yeah.
He made a comment about the final private demand, which was 3% growth last year. Again, a very good set of data. So on the basis of what we saw, and I know a lot of people have interpreted that as a hawkish cut. I don't think it was a hawkish cut. I think that he's just being coy about, what the new policies are going to be, where the new Trump 2.0 is going to start and what sort of policy they're going to announce. But on the basis of what's happening in US economy, job creation, you said some of the data just now, they just look good to me. And from where I'm sitting, yeah.
Well, no, and because you are a student of history, you are a student of market dynamics, you look at the empirical evidence and say, why do we need a rate cut? Well, no, that's me asking that as well. Do we actually need any more rate cuts in the United States? Should we hold off for the first quarter?
So I would put it the other way. Why should the rates be as high as it is now?
Right.
What is the job of central bank?
Stability. Getting inflation.
So the inflation has come down from 5 to 2.5, and this again going back to what we saw in the December communique from Chairman Powell.
Yeah.
Inflation has come down, and he did say that now the focus
stopped, hasn't it?
It has stopped. It has stalled, and I think that I'm not saying that it is likely going to go up, but what happens on Jan 20th, and what happens with deportation and everything that's going to happen, where it leads we don't know. So it's good to pause. So it's a good pause, I would say.
Yeah, okay. But again, you look at the PC deflator, it's stopped, and if anything, it's slightly moving in the opposite direction. Okay, what do we do with stock markets then on the basis of that? I mentioned a certain company that may or may not make EVs. Sometimes it's hard to notice whether they're making EVs when they're talking about other things such as, robo-taxis, AI, batteries, you name it, apart from EVs. But we've got a growth company, and I'll quote one of the analysts from last year, a growth company that's got no growth. Certainly in its core product, Tesla. How do we own companies like these?
So again, I'm not going to comment on Tesla. I'm not long Tesla in my portfolio. But what I would say is that the way I look at investment is that I look at what does this world need and who is producing it. That's my way of looking at things.
Yeah,
Chinese, or even if you look at why should we have tech company? I've seen a lot of chart that top 10 companies are 40% or 30% of index.
Yes.
Let's look back to free cash flow margin. If you look on the stat, the free cash flow margin generation of top 10 companies in 1950s was minus 5%. It was plus 5 or 10% in 1960s. Today it's plus 30%.
Wow.
So what we are talking about, there's an internal cash generation which is being used to grow sales. I mean, that's a powerful thing. So the world is changing. It's very difficult to forecast what's happening, but we just have to look at what's happening with cash flow. I mean, these companies are becoming bigger because their products and their services are in demand. And I'm not going to project next 5 years. It's difficult to project even next 12 months. But based on what's happening, percentages wise, based on what's happening and where things are going, we have to look at what they are doing. And if they're going to generate sales and they're going to generate internal revenue, and they have free cash flow of 30% when you go to buy the stocks.
Yeah. So this is really important. And the discounted free cash flow, great measure. A lot of our analysts, and you look at it as well. Other measures less useful. I mean, I look at a 1 year forward PE. Is that pointless now when you're trying to value these companies?
See, I would say that, forward PEs are not pointless, but the sales have to deliver, right? So if you're growing if you're being, at 40 or 50 PE, and some of these names are, then you better be growing your sales as 20, 30% or 40%. If that comes through, then stocks will be fine. But if that doesn't come through, then stocks won't be fine. So if you look at S&P, right, we plus 20% here for 2 years in a row.
Yeah.
But did you know that the worst performing 10 stocks in 2023 were down again in 2024?
Interesting. Yeah.
Estee Lauder and Etsy and some other names, Dollar General. So it's not that everyone is doing well. If you look at the last 3 year annualized return of S&P, 7%. I mean, that's less than what the median or average returns are going to be. So in my opinion, that yes, some stocks have done well, but there's still a lot of stocks that have not done well. So the bears are right in what they're saying, because there's plenty of stocks they could be short.
So these stocks that have been down 2 years in a row, should I be buying those?
Well, I'll have to look at again, what the sales generations are, what the forward-looking outlook is. But things like Dollar General, they had a small margin, they got beaten down. There's a lot of things that was happening at the company level, in terms of their expansion plan and how far they opened up new shops. So yes, if it's a turnaround story, it becomes a buy. But one has to again look at what the CEO is saying and what the plans are in place.
Okay, so what do we like on this side of the Atlantic? Anything?
Well, in the UK, we are in a position where we can't even produce our own statistics. Look at ONS's data. We can't rely on some of these data that we are looking at. So, but I would say that, the rates in UK, in my opinion, are higher. We should be seeing more rate cuts. But then it's complicated by many other things that's happening in terms of the wage pressure and how that is going to lead to. But in Europe, ECB definitely is going to continue cutting as it has done so far.
But rate cuts, great. Very blunt instrument, lower cost of money, fantastic. Lower cost of money on its own does not create stunning innovation. We saw that. We've had zero rates, we've had negative rates, we had negative Bund rates because everyone was rushing into them as well. It didn't create innovation, restructured economies, deregulation as well. Ergo, we've still got the same problems we had. Now we've got a decent cost of money, albeit declining at the ECB and the Bank of England. So all those things, it's great. It's kind of like the short-term sticking plaster, but it's not going to create the kind of growth that's actually going to get European investors excited about owning European stocks.
That's absolutely true, and which is why, in personal, my portfolio, I've been overweight US for the last 7 or 8 years, and I'm not going to change that. However, on relative basis, if the European stocks start looking cheaper and the US stocks looking expensive, then you will see rotation. So there's a trade to be done in that, but not for the reason that UK or Europe is going to grow at 3%. US is growing at 2.5%, still the best market to be in.
Any notable mention about China and getting exposure to China
well,
at the moment? I have no idea what's going on in China. I stand conflicted on this one the whole time.
Steve, let's look at 10-year yield on China. It has gone to historic low, 1.6%.
Yeah.
That means a stimulus has to come from there. Otherwise, they enter into a deflation trap Japan went in.
I'm going to say it. Sorry, I know I've got to go. China's cutting rates and apparently it's growing at 5%.
Yeah.
Does someone want to give me a reality check on this? Because that does not make sense to me.
Well,
I say apparently growing at 5%.
Yeah. So I would say that, the fiscal push has to come from the government side. And in China, as you know, it takes time. To me, after the Spring Festival is the time where you will see a lot more fiscal push, and that is end of January or first week of Feb.
Yeah. Okay. Manish, lovely to see you. Thank you very much indeed for joining us. Manish Singh, who is Chief Investment Officer at Crossbridge Capital Group, wish you a healthy and prosperous 2025. Big story developing, actually. The President of the United States, Mr. Joe Biden, has reportedly decided to block the sale of US steel to Japan's Nippon Steel. This, according to Reuters and the Washington Post, which says an announcement is planned as soon as today. Lynn, Very interesting. Yesterday, JP almost wouldn't want to talk about BOJ stories because he didn't want to step on your toes. Bless him. He was so sweet. So we've got you straight away now to talk about a big Japanese story. It's not going to happen, is it?
Yeah, hey Steve, Happy New Year to you. This is what it sounds like. So after a year since we first heard about this takeover bid, this decision is now very imminent, and you've got now multiple outlets reporting that Joe Biden is set to block it. Now, this is all coming off the back of that national security review by the Foreign Investment Committee, CFIUS. They weren't able to provide anything unanimous. They weren't able to provide a unanimous recommendation to the sitting president, despite the numerous assurances that have been provided by Nippon, including this veto power in relation to any changes to production capacity as well. But obviously the context here is so important because this takeover approach is all happening in a very politically charged election year stateside. It's in relation to an iconic company that is synonymous with US economic growth and power. It is based in that critical swing state of Pennsylvania, and of course it has been opposed from the get-go from a very influential US steelworkers union as well. And so what we saw here is consistently Joe Biden as well as the president-elect Donald Trump, and let me add in there as well Kamala Harris when she was the Democratic nominee as well. They have all opposed the takeover of US Steel by a foreign company, both before and after the election as well. So I guess in that respect, this, if it is indeed true, shouldn't come as a major surprise, but the implications are immense for US Steel. We've heard David Burritt, the CEO, saying that it could result in closure of steel mills, which could result in job losses. He said that the biggest winner out of all of this will be China, given the dominance that their producers have on the global stage now. And he says that this takeover is needed out of necessity to remain competitive, because the reality is that US Steel is no longer a market leader anymore. It's ranked 20-something globally and is only the third largest in the country as well. And then I suppose in terms of what this means for Nippon Steel, certainly they're going to have to look elsewhere for growth. They're also going to have to deal with this massive break fee as well, reverse break fee of about $560 million. And of course, as well as that, massive implications potentially in terms of Japan-US relations, given that, you know, analysts have said this seems like a bit of a contradiction to Joe Biden's foreign policy, which has been really focused on friendshoring, on securing supply chains with like-minded democracies like Japan, for example. Steve.
Superb coverage. Thank you very much indeed for that, Lynn. And if I don't see you later on, have a superb weekend at that. Right, let's move on. Computers of senior US Treasury leaders were reportedly accessed by Chinese state-sponsored hackers during a recent cyber attack. This according to Bloomberg. It says they gained access to unclassified material. US authorities say the man who killed 14 people with a truck in New Orleans acted alone. Investigators say evidence indicates the attacker was 100% inspired by ISIS. The man previously worked for audit firm Deloitte and served in the United States Army. Investigators are trying to identify his path to radicalization. Authorities also said no definitive link has been found between the New Orleans attack and the explosion of a Tesla Cybertruck outside a Trump hotel in Las Vegas. The individual who drove the Cybertruck has been identified as an active duty US Special Forces soldier who fatally shot himself before the explosion took place. 7 people received minor injuries in the blast. Officials have called the incident a suicide with a bombing and are investigating it as a possible terror attack, but have not yet determined a motive. Coming up on the show, investigators failing to arrest the impeached South Korean President Yoon Suk Yeol after a standoff with his security team as he vows to fight on. Sherry Kang has the latest after the break. Plus, Tesla's stock hits reverse, fourth quarter deliveries missing estimates, reporting an annual drop for the first time, and we'll look at what to expect from today's key House Speaker vote with Peter Trubowitz, who is a professor at the London School of Economics and Associate Fellow at Chatham House. That's coming up at 8:30 London time. So we have the Shanghai Composite still losing a bit of ground, under a lot of pressure so far this year. It's very early days, we all know that. Down 1.37% at the moment. Hang Seng mildly higher, Kospi up 1.8%, despite extraordinary politics in that country. We'll come to that in a few moments' time. We shall move on and take a look at the Chinese markets as well. Obviously, Shanghai Composite is one of those as well. But yeah, so again, big declines across the board. Hang Seng, the notable exception. Interesting. The People's Bank of China is reportedly planning to cut interest rates this year as it aims to align its policy with the Federal Reserve, the ECB, in terms of basically just taking away a lot of different interest rates. This according to the Financial Times, which says policymakers are waiting to cut rates at an appropriate time this year and will move away from quantitative objectives for loan growth. China's 7-day reverse repo rate, which is PBOC's main policy instrument, is currently set at 1.5%. Help me out here, guys. Xi Jinping went on the box just before the new year and said we're growing at 5%, yeah? Any country out there that's growing at 5%, do they need rate cuts? I'm confused. I'm really confused. I'm going to keep asking the question because someone out there knows the answer. Are they really growing at 5%? Why are we cutting rates if we're going at 5%? Just asking for a friend. New measures on US investments into China came into force on Thursday as the US Treasury Department aims to address national security concerns. Under the new rules, US companies that invest in Chinese semiconductor, AI and quantum computing firms that could be used by the Chinese military would face criminal penalties. Well, back at you. At the same time, the Chinese Commerce Ministry added 28 US entities, including major defense companies, to its export control list, as it aims to, quote, safeguard national security and interests. It's kind of very calibrated, isn't it, on both sides at the moment. Anyway, Sam Vadas filed this report.
Chinese stocks building on their weakest start to the year since 2016. Small caps got smoked in the morning session as bond yields touched fresh record lows. China reiterated today its pledge to increase funding from Treasury bonds to fuel growth this year, but investors appear to be waiting for more substance rather than just signals. On the trade front, China has slapped 28 US defense contractors on its export control list, including big names like Boeing and Lockheed Martin. It means trade of these dual-use goods to these entities will be banned, and exporters will have to apply for permission to ship those items. Now, 10 of these contractors have also been placed on an unreliable list over the US's arms sales to Taiwan, which of course China doesn't like. Now, that means these companies will be banned from trade, making new investments in China, and their executives will also be blocked from entering the country. The big question, of course, now is how much of an impact this will actually have on the defense business and whether it will in fact affect the commercial side now. Now, in a separate move, China is now talking about expanding export restrictions on the tech used to make batteries and process critical minerals. While some expect this to help China retain its global grip on lithium processing, it could also impact the international expansion plans of some of these companies like Contemporary Amperex. Now, Aussie lithium miners fell in trade today in a sign this could potentially throw a spanner in the works. In Singapore, Sam Bardas, CNBC Business News.
This next story. Listen in. Following an hours-long standoff, South Korean authorities failed in their bid to execute an arrest warrant for the impeached President Yoon Suk Yeol over his brief imposition of martial law. Sherry, this is extraordinary. And I don't want to use too hyperbolic language. I don't want to get too exacerbated about it. But you've got authorities on one side, presumably some form of security forces, trying to arrest this gentleman. And on the other side, you've got soldiers and security forces trying to stop the arrest of this gentleman as well. This sounds very, very dangerous and volatile situation. I'm trying not to use certain words which I think should be appropriate here, but why don't you just talk us through it?
I think this is one of the episodes that actually shows this competing rivalry among different investigative bodies in this particular martial law-induced impeachment against the South Korean president. So just to lay it all out, we've got the impeachment that happened, but the Constitutional Court needs to rule on that to make it official and final. Apart from that, the investigation is underway under the charges of insurrection against President Yoon Suk Yeol. Now, the arrest warrant was given. There was hours of a standoff between the investigators versus the Presidential Security Service. Investigators decided to retreat for now, but this arrest warrant actually expires next Monday. So we'll see what they decide to do until then. Political circle is reacting, as you can imagine. The ruling party is basically saying this is too excessive to try to detain a sitting president. The opposition party is on board with this idea of arresting President Yoon Suk Yeol. Yoon's legal team is saying that this particular investigative body doesn't have the investigative rights in this particular case, so that's why he is fighting the arrest and basically vowing to take a legal action over these illegal, what they're calling illegal execution of warrant. In the meantime, I think it's fascinating what the market is doing. Sure, there is the valuation story, but it's in a rally mode, and I believe it is one of the outperformers in the region today. Perhaps the market is thinking, yes, it looks very messy, but it's not a surprise. They actually sort of understand what's coming when a president declares a martial law and when he gets impeached. So we're in that messy process, and we see a rally in the markets in South Korea. Steve?
But Sherry, I think that's an extraordinary attitude from investors, and I follow your logic as well. But I guess I don't have an issue with one set of politicians think he should be impeached, another set of politicians think he shouldn't be impeached. The thing that worries me perhaps more is you've got one set of military and security forces on one side and one set of military and security forces on the other side. And it harks to the politicization of those aforementioned police, security forces, stroke military as well. That's the bit that really worries me. Not that politicians have a differing view on whether someone should be impeached. It's the fact that you've got military, stroke police on two sides of a divide and what that could transpire into.
Fascinating question, amazing question coming from you. And I think that could actually be the center of this so-called Korea discount. Because what the president said when he was declaring the martial law on December 3rd, in fact, exactly a month ago, he talked about North Korean communist forces and anti-state forces in the country. And he really needed to declare the martial law in order to sort of do some sort of a cleanse. It's not very clear what he wanted to achieve, but there is this election rigging allegations and so on. And to the very point that you're making, Steve, I think that's what this particular martial law episode revealed to the world and also to the country, that people in the South Korean authorities are divided. The investigative bodies, the justice department or the government is all divided here. And yes, it is very dangerous. And I think the president sort of laid bare all that, and hence the Korea discount. Do I sound too pessimistic? But I think that's where I stand.
No, you don't. You sound measured, you sound knowledgeable, and our viewers are better off for it. So thank you very much indeed for that, Sherry. We do appreciate it.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.